Business Economics 2 MCQs Part 9. Economics dash argued in favor of protectionism. Option A Adam Smith, option D Feathers, option C Frederick List, option D Luther. The correct answer is option C Frederick List. Dash benefit more under free trade. Option A competition, option B WTO, option C producer, option D consumer. The correct answer is option D consumer. Consumer benefit more under free trade. Balance of payment always dash. Option A devaluation, option B trade account, option C balance, option D adverse balance of payment. The correct answer is option C balance. Balance of payment always balance. If imports are more than export, then option A devaluation, option B trade account, option C balance, option C adverse balance of payment. The correct answer is option D adverse balance of payment. If imports are more than exports, then adverse balance of payment. Dash investment are risky and not reliable. Option A portfolio, option B direct, option C indirect, option D new. The correct answer is option A portfolio. Portfolio investment are risky and not reliable. Dash involves transfer of technology. Option A foreign direct investment, option B domestic direct investment, option C domestic indirect investments, option D foreign indirect investment. The correct answer is option A foreign direct investment. Traffic and quotas can be improved through dash. Option A protectionism, option B competition, option C WTO, option D Frederick List. The correct answer is option A protectionism. Terms of trade can be improved through option A WTO, option B competition, option C protectionism, option D Frederick List. The correct answer is option C protectionism. Term of trade can be improved through protectionism. Dash are more effective than traffic. Trade account, option B balance, option C advance balance of payment, option D quotas. The correct answer is option D quotas. Quotas are more effective than traffic. Dash depreciation is due to market force. Option A exchange, option B inter-exchange, option C change, option D adverse. The correct answer is option A exchange. Exchange depreciation is due to market force. Dash advocate reduction in traffic and removal of quotas. Option A WTO, option D WHO, option C WOT, option D WNT. The correct answer is option A WTO. WTO advocate reduction in traffic and removal of quotas. The theory of comparative advantage is given by option A David Ricardo, Adam Smith, option C F.W. Stossing, option D Olin and Hackes. The correct answer is option A David Ricardo. Theory of comparative cost advantage is given by David Ricardo. At present, free trade is encouraged by option A competition, option B WTO, option D Frederick List, option D consumers. The correct answer is option B WTO. At present, free trade is encouraged by WTO. Economics dash argued in favor of protectionism. Luther, option B Samuelson, option C Frederick List, option D David. The correct answer is option C Frederick List. Economics Frederick List argued in favor of protectionism. Which of the following is the international trade? Trade between countries, trade between regions, option C trade between provinces, option D both B and C. The correct answer is option A trade between countries. Market in which currency buy and sell at their price settled on is called the dash. Option A international bond market, option B international capital market, option C foreign exchange market, option D euro currency market. The correct answer is option C foreign exchange market. Which of the following trade policy limits specified quantity of good to be imported at one traffic rate? Option A quota, option B import traffic, option C specific traffic, option D all of the above. The correct answer is option A quota. In the two-factor, two good hexer or in model, the two countries differ in option A military capabilities, option D labor productivities, option C relative abilities of factor of production, option D taste. The correct answer is option C relative abilities of factor of production. Nations conduct international trade because some nations prefer to produce one thing while others produce other thing. Option B, resources not equally distributed among all trading nations. Option C, trade enhance opportunity to accumulate profit. Option D, interest rates are not identical in all trading nations. The correct answer is option B, resources are not equally distributed among all trading nations. Tax on imports can be treated as option A collateral, option B trade barriers, option D foreign trade, option C term of trade. The correct answer is option B trade barriers. Tax on import can be treated as trade barriers. By definition, currency appreciation occurs when the value of all currency falls relative to gold, the value of all currency rises relative to gold, the value of one currency rises relative to another currency, the value of currency falls relative to other currency. The correct answer is option D. The value of one currency falls relative to other currency. A forward currency transaction is always at a premium over the spot rate, mean that delivery and payment must be made within 1 business day or 2 business days after the transaction date. Calls for exchange in the future of currency at an agreed rate of exchange. Option D, set the future date when delivery of the currency must be made at an unknown spot of exchange rate. The correct answer is option C, call for exchange in the future of currency at an agreed rate of exchange. Hedging is used by companies to decrease the variability of tax paid. Option B, decrease the spread between spot and forward market quotes. Option C, increase the variability of expected cash flow. Option D, decrease the variability of expected cash flow. The correct answer is option D, decrease the variability of expected cash flow. Exchange rate are always fixed. Option B, fluctuate to equate the quantity of foreign exchange demanded with the quantity supplied, fluctuate to equal import and export, fluctuate to evaluate rates of interest in various countries. The correct answer is option B, fluctuate to equal the quantity of foreign exchange demand with the quantity supplied. In a quota exchange rate, the currency that is to be purchased with other currency is called the option A liquid currency, option D foreign currency, option C local currency, option B base currency. The correct answer is option B foreign currency. An economics will define the exchange rate between two countries as the option A amount of one currency that must be paid in order to obtain one unit of another currency. Option B difference between the total export and total import within a country. Option C price at which sales and purchase of foreign goods take place. Option D ratio of import price to export price of a particular country. The correct answer is option A. Amount of one currency must be paid in order to obtain one unit of another currency. A floating exchange rate is determined by the national government involved. Option B remain extremely stable over a long period of time. Option C is determined by the action of central bank. Option D is allowed to vary according to the market force. The correct answer is option D is allowed to vary according to market force. A stimulates purchase and sale of foreign exchange of two different dates is called option A currency devalue, option B currency swap, option C currency valuation, option D currency exchange. The correct answer is option B currency swap. Indian foreign exchange rate system is option A free float, option B managed float, option C fixed, option D fixed target or band. The correct answer is option B managed float. India foreign exchange rate system is managed float. India is facing continuous deficit in its balance of payment in a foreign exchange market. Rupees is expected to option A depreciate, option B appreciate, option C show no specific tendency, option D depreciate against currency of the countries with positive balance of payment and appreciate against country with negative balance of payment. The correct answer is option A depreciate. The demand for domestic currency in a foreign exchange market is indicated by the following transaction in balance of payment. Option A export of good and service, option B import of good and service, option C export of good and service and capital inflow, option D imports of good and service and capital flow. The correct answer is option C exports of good and service and capital flow. For more MCQs, please prefer subscribing and click on notification bell icon for the next part. Thank you.